Hey guys, this is Kevin Kleinman, head trader at Watchhimtrade.com. Today's date is Monday, October 13th, 2014. I'm here with my Bulls vs. Bears outlook. If you watched me yesterday on Sunday, you know that I was coming into the week with a Bulls jersey on with the premise that we were going to hold 1900. However, I didn't wear that Bulls jersey very long. In fact, once the market opened, I never wore it at all. I only made short trades today. Why? Well, in last night's video, I talked about a couple key things. Number one, could we hold 1900? If we could hold 1900, I was looking for a bounce. If we couldn't hold 1900, I was expecting downside pressure. Number two, I was interested in Google 550 action. Could Google hold above 550? If it could, market bounce. If it couldn't, market pressure. Number three, and most importantly for me, my style of trading was Netflix. Netflix was right around 450 coming into the day. I had felt if you broke down at 450, Netflix was going to go lower, and that would be a leadership signal that the market was going to go lower below 1900 as well. So if you look at a chart of Netflix, you'll see right around 9:42, 12 minutes into the day, Netflix broke down below 450. 1 minute later, at about 9:43, I made my first trade. It was a short trade on GoPro. If you look at GoPro, you'll notice right around that time it broke down beneath 81, 80 bucks or so and flushed out towards 75. GoPro wasn't the only one though. Tesla flushed hard from 235s to the low 220s. Amazon flushed out down to 303s. SCTY, another momentum stock, got flushed down towards 50 bucks. Yelp, another momentum stock, got flushed down towards 60. Momentum was getting flushed out everywhere. MBLY, a stock I don't trade but that I have an eye on, this thing was 50 bucks a day or so ago, 2 days ago. Just looking now, MBLY closed at 45 bucks. Actually closed off of its low, but still down 5%. If you look at futures, if I could blow this up and show you, you will see just a huge leg down in the futures. Maybe you can see this from about 1900 around 230, and you closed at 1866. That is a 30-point drop in the futures, and it was really simple. The Bulls lost the battle at 1900. There was no need to be stubborn if you were observing it like I was. If you couldn't hold 1900, we knew it was going to sell off. That's the rules. That's the way it works at these psychological levels. And you couldn't hold 1900, and you did sell off. So now, I put my Bears jersey on at about 9:43 this morning, and I kept it on all day. We were above 1900 later on, and I thought, okay, maybe I'll go back to the Bulls jersey, but let's see how things close. And that close right there certainly confirmed that I should keep this jersey on. Now it gets kind of interesting because right here, right now, we've sold off so hard that you might get a bounce. And you might need to wear this Bulls jersey for an hour or so. You might come back up towards 1900, but I'm putting the Bears jersey on because I want to represent my thoughts as a trend and what my general bias is here. And I am short biased. I am a bear now. I've joined the camp, probably one that's maybe a little bit more crowded than I would like, but I'm just looking at the price action, and that's what I think the right decision is. So what I'm looking for now is, I'm still watching Netflix 450. You closed around 441, 442 on Netflix. So I'll be watching to see, does it stay below 450? If it does, I think that kind of confirms keeping on this jersey here. Also watch the S&P. We got hit especially hard. Closed around 1975, 1974. I would think that there should be a little bit of a bounce, maybe a back test on that 1900 level, but up towards 1900 on a bounce is where I would look to short, and especially if you can't even make that bounce and you just continue to flush below 1870. One level I want you guys to really be aware of is 1848. 1848 kind of seems ambiguous, but really it's not. It is where the market closed in 2013, kind of that break even. And just like I look for red to green or green to red moves on a day trading basis, I will certainly be watching the S&P 500 for a green to red move. Does it act like it's setting up for that green to red move? If I had to answer now, I would certainly say yes. That does seem to be like what it wants to do. It wants to go in the red on the year, but we'll have to see if we stay below 1900. You got to stay below 1900 for me to keep on this number 23 Kyle Fuller jersey. Shout out, cornerback for the Bears, best defensive rookie in the league. Anyways, so you got to stay below 1900 for me to keep being bearish. Otherwise, above 1900, we start to look like, okay, maybe it is bottoming, setting up for a base. And then 1925 would be the next key level. 1925 was our low last week. If you want to be precise, it was 1926, okay? And once you broke 1926, then we really started to flush further towards the end of last week. So now, key in technical analysis, previous support, 1925, 1926. Now I'm looking for it to become new resistance. So get above 1900, we can bounce. I'll take this jersey off, maybe put on that Bulls jersey, maybe not put on any jersey, be a little bit neutral. Ultimately, for the trend to resume back to the upside, you got to get back above that 1925 mark. My best advice is you got to be open-minded with everything that you're doing right now. Volatility is super, super high. You are having tons of moves. So, for instance, today we went green for a moment. You know, we were printing 1907, 1908. We were in the green. We reversed. We closed 40 points off of the S&P's high, which was just 2 hours ago, around 2 o'clock. Netflix got up to 447 from a 433 low. Netflix bounced 13 points. Google got up to 557 from a 546 low. Google bounced 11 points. Both of those names closed well off of their highs, though, off of those bounces. Okay, Priceline bounced to 1160 from an 1060 from a 1017 low, but then closed back down near 1040. So you got to be open-minded. You got to be flexible. If you're just trying to stay on one side of the trade for too long, you're getting whipsawed back and forth. All right. So have your targets, have your stop loss, put some trades on because it's good volatility to be doing that. But in the back of your mind, be open-minded to the fact, all right, we've just dropped 5%. We might bounce 2%. And then once we bounce 2%, you might end up coming back down and being down 6%. It's just all over the place right now. So don't be amused by it. Don't be impressed by it. If you're going to try and trade it, be accepting of it. All right? Otherwise, if you're not trying to trade this, just step on the sidelines. Have some stocks that you'd be ready to step in and buy. I'll tell you 2 long-term names I'm looking at. Tesla. The closer Tesla gets to 200 bucks, I am looking at that long term. I was a seller on a long-term position in the 260s. I would be happy to buy that back down near 200. GoPro. I was a seller on GoPro in the 90s on a long-term position. The closer GoPro comes back down into those 60s, the more and more I think about, hey, I might want to step in and buy this. So there are some long-term names that I'm starting to consider, and I think anybody who's investing for the long term should be considering the same thing. So be true to yourself, be true to your ideas, be prepared. Good luck.